But let's talk about the entire set of cues that you should watch as we get into a fresh trading session. We have Sonia as well as Mangalam joining us to take you through the trade setup and all of the stocks that you should have on your radar. Guys, a very good morning to both of you. Sonia, let me come across to you first. We were just going through the global cues, and it is likely to be a lot about that today.
Oh, absolutely. It's expected to be a weak start this morning as the Dow is down about 643 points overnight. In fact, the Nasdaq was down about 2.5% as well. And it was a sell-off across the board in the US market. So you had all 11 S&P 500 sectors that closed in the red. There was a decline seen in the IT and consumer discretionary stocks as well. So I'm expecting our own markets to open in the red as well. And now the Zoom share slumped after the company lowered its full year forecast. For our own markets as well, the Nifty had a rough session yesterday. It ended below the 17,500 mark. Both foreign and domestic investors sold in the cash markets yesterday. FI sold about 450 crores, while the DII sold 85 crores in the cash markets yesterday. This is the biggest fall that we've seen in the last 2 months. The rupee has hit a 1-month low as well. So in all likelihood, there will be a weak start. The important bit is that this has been a buy on dips market. So is that a trend that will continue? Only time will tell. But for now, the SGX Nifty is indicating a cut of almost 100 points. Back to you.
All right, so it looks like we're going to get a start well in the red, but let's see how we move from there on. But Sonia, stay on. Also take us through the individual names that we should be tracking in today's trading session.
So I'm watching for 4 stocks. Infosys tops my list actually because the company will be cutting its variable pay. It has decided to reduce its average variable pay to 70% for the month of June due to the margin squeeze and the margin pressures. And we've seen it happen across the IT space, so perhaps that could be in focus. Cipla will be in focus as well. The company says they will be doubling their India business in the next 5 years, and they expect the wellness business to grow from 600 crores to 2,500 crores over the next 5 years. So I'm expecting that stock to be in the green. There was a very interesting discussion that we had with RC Bhargav yesterday on the 4 decades of Maruti JV completion. They said that there is unlimited potential to expand the car market. So Suzuki will be focusing on the entry-level market, while the partnership with Toyota will focus on the high-end aspirational market. So they'll cover the entire gamut. I'm also watching out for Lemon Tree Hotels today. They've signed a license agreement for a 65-room hotel at Hubli in Karnataka, and this will be operational by May of 2023. Back to you.
All right, Sonia, thanks a lot for running us through that entire list of stocks. Finally, let's also bring Mangalam in, who's looking at all of the cues from the futures and options space. Mangalam, it has been 2 weak days for our markets. Take us through what we should track.
Well, in just the last 2 trading sessions, the mood on the street has changed. Risk is back on the table. In just 2 sessions, we've lost almost 500 points on the Nifty, 465 points to be precise. And in doing that, the India VIX, which is the measure of volatility and fear, has also risen by about 10% And this is the expiry week, and as the SGX Nifty indicates, the declines continue into the expiry week as well. The SGX Nifty indicating a start lower by almost 83 odd points. In yesterday's trading session, there was a buyer strike. Both the FIIs and the DIIs sold, albeit a small amount, but selling there was by both the institutions. Net sell-off being closer to the 550 odd crore mark. In index futures, the FIs cut both their long and short positions. The heartening fact is that they cut more shorts than longs, but then again, we are looking at weakness at the open itself. In terms of option selling and option buying, they bought a similar amount of options. So the FI positioning in the expiry week is rather on an even keel, 50% long, 50% short. And if you take a look at the option buying, it indicates that maybe the markets can move anywhere from here on. 48,000 puts, 43,000 calls. And in terms of option selling, they've written more calls. So that's telling you that maybe on the way up, there could be a fair amount of resistance. In fact, in just the last 2 trading sessions, they bought almost 1.2 lakh puts. So they're protecting themselves for the downside, and they've written almost 2 lakh calls. So they believe that over, the levels of close around 17,500, 17,600, we may face stiff resistance. And that's exactly the kind of action that took place in the options as well. The active options was 17,600 call, added 63, 64 lakh shares in open interest out there. 17,700 call as well as 17,500 calls. All of them were pretty active on the sell side. So now with the SGX Nifty indicating, a lower opening, the important thing to watch out for will be the 20-day moving average, which on the Nifty right now is 17,340, just 60 points below where the SGX Nifty indicates that opening. Will that be an important support or not? Something I'll be watching out for. And for the Nifty Bank as well, is just about 200 points lower. So will that support that index or not is the big question. So on the way down, these are the levels I'm watching out for.
Right, we're going to watch out for these levels. Mangalam, thanks a lot for getting us all of those cues that we should track. With that, it's time for our first short break.